Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Clint Brewer today, my master analyst behind the scenes who makes everything happen and helps me in a huge way. I appreciate you joining me this morning. A lot to talk about. I'm going to start it out by saying this is the market that is the chicken with his head cut off. So, what I mean by that is, I don't really know about this, but people have told me like when a chicken gets his head cut off, which is kind of gross to think about, he can live for a period of time walking around like that. So this is the market we're in, a severely internally bruised or wounded market with its head cut off. Stocks, really under the surface, cut down a lot, but they're always finding something to buy, and this little rally in NASDAQ off the low was Nvidia, which was, my 10 phone call limit when it was trading at 170. But those phone calls stopped at 190. So now the stock is, trending higher and everybody's safe again in that name, which is heavily institutionally owned. And, I'll throw it to you to tell me what you're looking at and what you want to talk about today, but a lot to talk about for sure.
Yeah, I mean, look, they're they're definitely buying the dip again. I mean, we had the strong rebound on Friday, some more follow through yesterday. I saw a stat that there were $6 billion in fund flows into tech funds last week, which was the largest in 8 weeks. So I mean, they're per usual, they're definitely coming after it. But yeah, I mean, you talk about chicken with its head cut off and damage under the hood. Yeah, I mean, it's been a wreck in the tech sector, and really it's something that picked up steam last week, but it's not really anything new. We've been in your e-letter, we've been calling this trend out really for the past several months. And it's that, a lot of your mega cap tech stocks, which, these things make up 40% of the S&P 500 and 50% of the QQQs, which is the NASDAQ. A lot of these things peaked out in October and November of last year and have been struggling ever since. And it kind of reached, we saw some extreme moves last week. I mean, you see what was happening in Palantir and Microsoft. I mean, Palantir is down like 38% off their prior highs. Microsoft's down, I think, close to 30% off their prior highs. So, I mean, these are some really big moves that are taking place, but it also masks some positives, I think, that have been happening under the hood. It's like, while all these tech names are just getting absolutely whacked, especially, late last week, you have more like cyclical areas of the market have been holding up well. So like transports of all sectors have been breaking out. And so we're mid caps, so we're banks. So it's, if you're just following what's happening in tech, you would think, that there's just carnage everywhere, and there has been in the tech space, especially in software stocks, but elsewhere the action's been a little bit more positive. But I think that if I have one big takeaway with what happened last week, it's that I would say this. I would say that it has never been a riskier time to be an index investor. It's never been a riskier time to own SPY or to own QQQ, because you can see just the sheer weight of these names like Nvidia and Microsoft and Apple, how they can just absolutely drag the indexes lower. Meanwhile, you've got better action elsewhere. I think you need to be this year relative to prior years, you need to be much more active. The whole buy and hope strategy is out the window.
Yeah, I tend to agree with that. I just, we got down on Thursday night to in the S&P, which isn't that big, but 6750. Literally, we rocketed up 4.5%, okay, on what have been bad numbers and sector rotation, and we rocketed up on no volume on the E-minis. Like, it was interesting yesterday. I'm looking at the E-minis, and I had to check like 3 or 4 times. The week before, we were trading with good volatility, and we walked in Friday morning to 23 vol, right? And now we're maybe at a 16 vol, just in a move that's only 3 or 4%, which is a big move for what we do, because all indexes like the the Nasdaq's flat on the year. The Dow's up extreme. It's up like 4% on the year. And the S&P's up a little under 2%. And literally all these indexes were, except the Dow, were lower on basically Friday pre-open. And now everybody's feeling giddy and feeling really good. For what reason, I'm not really sure. I think, what I've seen off of earnings is two different things. One is beats by some companies and then trade much lower, like, Palantir, which somehow bounced from pre-market 122 to like 145. It was in really bad shape. And now it's kind of holding, probably leg lower, but I'm just price. It's funny. I call Eric, and he's not here to defend it. So, but I call him the king of price. So, like when the price is up, he's bullish. When the price is down, he's not bullish. He's bearish, or he's not buying. So that's the market we have now. Sellers live lower, buyers live higher. It's just it's an amazing move relative to the moves we've had to have this move back. And if you look around the board, there's really not like, they put a story around it because that's what they have to do. But I don't really know what the story is like to get us here where, it's funny. Bitcoin traded down to 60K, right? But, that was a blink of an eye. It really only traded at 65,000. That was just like Thursday night freak out where they had silver trading at $64. Now it's 80. It's 82, but it got up to 85. It ran like 30% in 2 days. So, I mean, this is where we live in an illiquid market, buyers not meeting sellers. But there's a lot to talk about because and maybe you have a good handle on this. Like, why is there always rotation? Like, why, if they're getting out of tech, why are they buying Dow or buying old line industrial? Like, this is what I don't understand. They're destroyed in Bitcoin and tech, or fairly destroyed, right? I mean, minimally haven't made money in 6 or 8 months and probably have lost money if they own the names that you're talking about. How do they have the money to go now get out of it and then go buy, Caterpillar at $750 a share? So that's what I'm really trying to grasp how
Yeah.
the sector rotation is so manipulated and so that everyone can see it, and they're they're not making money in tech and leaving tech. They're losing money in tech, right? And leaving tech.
Yeah, I mean, look, I have like three thoughts around everything you just described. Like one is okay, the rotation. Why do they have to own something? I think one thing to remember too is like with the institutional investor crowd. I mean, they're mandated to own something. Like, I mean, I used to work in that world, and I mean, you had a mandate that you had to be at least 80% invested, and you're going to be benchmarked to the S&P 500. Like there is a large subset of flows that has to chase something. And now they're not chasing tech. Maybe they're chasing something else. You mentioned Caterpillar. I think Eric actually might have mentioned this yesterday, and I think it's a good point. Like, Cat's almost become an AI trade now. If you want some, if you want to track how the AI trade is going, everyone's focusing on all these software names. But if you want to track AI, like the sentiment around Capex spending, track these guys that are feeding into the data center build out, the pick and shovel plays, and Caterpillar in particular. I think with generators, that's where they really come into play. Watch, you don't think about like HVAC companies that do like cooling equipment. These HVAC systems for data centers are just been huge. So watch tickers like FIX, Train, ticker TT, and there's Carriers, a couple other ones. Like, if you want to watch how these stocks are reacting, if you want to get some insights into kind of the mood of the AI trade, that's one thing. And then the last thing I want to bring up, because I'm really curious to get your comments on this, what the action last week with what you saw. So like last week, we talk about factor investing sometime, the momentum factor. So the momentum factor just favors stocks that have gone up a lot over the past year. Well, momentum crashed the hardest relative to value stocks Wednesday or Thursday last week. It was the biggest difference in returns in 4 years. At the same time, you had, that what was going on with Bitcoin. Like, did it, in your experience, like, did it have the feel to you like that maybe there was some big fund was forced to liquidate somewhere? Just because, like, on Wednesday or Thursday last week, I'm watching some of the moves in some of these stocks, and the last time I saw anything like that was when Bill Hwang was blowing up. I can't remember the name of his fund, but there were. I was getting those vibes at one point last week, and it's just like, did that have any sort of forced liquidation feel to it?
I don't see it. I talk about this a lot on the podcast. I don't think the blowups are at big funds. I think all the multi-strat funds like the Citadels and the Millenniums, they don't let exposure get big. So it's no multi-strat that's getting hit, right? So it may be like an individual hedge fund, but they're not that big. I think it's more, I guess retail flow. And it's just like the moves were insane. Like Robinhood traded down to like $73 in the aftermarket, $72. And then you turn around, it's 85. It's up like 20%. These stocks are up so much off the low. And really, the whole mantra was, that their retail's getting hit because of Bitcoin. But let's look at Bitcoin. Is Bitcoin really back to anything? I mean,
Yeah,
it looks to
yes.
me like it never really traded below for anyone to sell it below 66, 65. It never really did. It got to 62. You could have bought it. And then overnight it traded down 1,000 and went straight back up. But maybe this thing goes back down to the lows and sits again, because there's really not a lot of positive coming in crypto that I see. And legislation is going to be, they're running out of time, right? I mean, the midterms are going to change everything. Our favorite site, Polymarket, that we look at has, basically 80 to 90% chance that they're going to lose one. So I think that we're going to run into a problem there, and maybe it even trades lower, because really Bitcoin never traded above 70,000 before Trump became the president. So, that was the, euphoric move that he was going to make Bitcoin the national currency and all this other stuff. And if you ask him what Bitcoin is now, they have to remind him, because he really, he played that for the election, which he played beautifully. But, you know,
Here's the here's the Bitcoin chart. I just pull it up really quick, and yeah, I mean, here's the test around that 62,000 level that you're talking about. Which, you go back. I mean, here's early November 2024. I mean, this move has completely erased the post election rally. And I mean, you can see we're coming. The 60,000 level is really important. I mean, we're coming up to an area of, call it price congestion. But I'll be surprised. I mean, I'm surprised that, or be honest with you, I mean, I'm surprised we haven't seen a larger bounce off this level in Bitcoin. I mean, it already, you got the RSI got down to the second lowest level it's ever seen, and it already looks like price is starting to stall out a little bit right here.
yeah, yeah. So we'll keep an eye on that. It looks a little heavy, but it may hold in here at 65 or whatever. But let's say it does. Let's say it holds right here at 68 or 69. It's down almost 50%. I mean, that's a whitewash. Like, how can people, it's funny. Everybody's like, hold on, close your eyes, this, that. I guess that's the investor. The truth is that's the investor of what we're looking at here. You know, here's a question. So, like, I was thinking about this Nvidia. So Nvidia, when it gets to like 170, everyone does the freak out dance. Everyone calls me. How do I hedge? I missed 15%. I should have hedged. Then it goes back to 190. No one calls me. But what is the level that you think anybody's going to sell? And I can answer it for you. It's zero. No one's going to sell no matter where it goes. They just keep it. It always goes up. They keep it. They never make a sale. And maybe things are a little bit different in here. And maybe this is the year where they make you work. But again, it's too early to tell. As a friend of mine who's probably watching this podcast, every time we have a downtick, he's like, trading's back. But trading is not back.
We
Okay.
couldn't hold VIX above 20 for one day last week. Come
I
on.
know. Trading is
What
not really back.
Let me. We're talking about Nvidia. I want to get your take on something because I noticed this sort of shift in the narrative last week with earnings coming out. I think a lot with some of the volatility we're having in the market, invest people were losing sight of what was coming out on the earnings side, and you had Google coming out, Amazon coming out. It seems like this narrative around capex spending is starting to shift some around these AI hyperscalers. It used to be markets would go nuts and everyone would lose their mind when you had these big increases in what companies like Google, Amazon, Microsoft are spending for capex, and how that flows through to companies like Nvidia and whatnot. All of a sudden, last week that started to change a little bit. Like people actually freaked out a little bit over. I think it was Google's big ramp in capex spending that they're projecting for next year. It's like all of a sudden I started to see the bubble word thrown around in the financial media a little bit around it. It's like, is that that's a slight shift that I really haven't seen out of the market. That now they go from rewarding big capex numbers. Now are they starting to punish big capex numbers because
Yeah, I
they're
mean, well, listen, here's the thing I don't understand. And you probably know a lot more about this stuff than me, but the amount of spend from all these companies, so like Oracle's spending 300 billion. You know what their market cap is 300 billion. They're spending their market cap on building. What are they building? What is the capex? Data centers everywhere? I mean, my roommate from college was one of the first people ever in the data center business. And he says this is the most ridiculous, he sold his business for a lot of money back in the day. Company was called XN. And he, you know, basically looks at it. He's like, this is the craziest thing ever. Like, what's going to happen? There's going to be a data center on every street, every corner. Like, to do what? Like Chat GBT or not, Anthropic. You know what Anthropic's gross revenues are? They're like $5 billion. Okay, now that's not zero, but that's not enough to spend 200 billion, 400 billion. And Sam Altman, who knows what he has, he's got commitments all over the place that are fraudulent. But how are they like how are they making money is what I'm saying. And is everything with this build out of infrastructure data centers? What else is it? Do you know? Like,
I
what else are they
saw
building out?
I saw an interesting stat that using next year's projections, of these AI hyperscalers, only Microsoft is projected to generate free cash flow in excess of what they're spending on capex. So, like, if you're seeing that with companies like Microsoft, Google, Amazon, whatnot, like what does that mean for all these startups that don't have any established business? I mean, this is where the big fear comes into play, right? I mean, is the return on AI investment worth the massive sums that are going into it? And all of a sudden, I think the narrative that is starting to shift to that. We have not seen that concern come up. Like, I think it was pretty remarkable last week that investors started punishing these big, increases in capex spending. Because I think they're coming around to what you're talking about. It's like, okay, these are some massive gargantuan sums. Or are we are we allocating properly, or can this be put to something else that's a better use?
Yeah. I mean, we're talking a lot about it, and I want to kind of shift, but yeah, I mean, I just I don't listen. I'm not a tech guru, but I just don't see it when you have, I mean, the numbers are in the trillions and trillions and trillions off of businesses that are generating 5 billion in revenue, 2 billion, and that's off of a subscription service model for like top end $50, to get Anthropic. I don't know. Like, I don't know if there's advertising going to be involved. I don't know what it's going to be, but we're early days, and I would bet that Sam Altman has a problem before mid year this year. with people calling him out. I know his last interview went sideways in a big way, where he like walked out. Um, and as you said before, now you're seeing him make fake deals, and when he does, the stocks he makes fake deals with go down, not up. So I think there has been a complete shift, and I think we're now in the show me stage. Show me that this can work. Show me why you're spending all this money. So, I think that that's something to watch, and I do think that will be a cause for the correction. Um, that's going to be maybe more significant than a correction moving forward. But, that's not for today's trade. If we spoke on Thursday night, that would have been Thursday night trade. But now prices are higher, so everybody is, pretty calm for now.
Along these same lines, we had a question come in. Says, is it fair to say that the AI trade has shifted to a stall a little bit, and now the market is turning to energy and other sectors? That's the question.
I believe so. I mean, that's what we're seeing. I mean, you could take it, but that's, pretty much what I'm seeing. Um, I may recommend a long trade in oil here through USO, looking at a structure to see what looks good for our subscribers. But I actually think I think things are going to heat up in the Middle East. I don't think we have all of that. Hardware there for no reason. I think we, on a military basis, have the most ships and, all kinds of stuff there that we've ever had, ever. So I don't know, what are we doing? Just hanging out? They want everybody hanging out there. So I think oil has a very good upside here and a very limited downside. Now, you could get disappointed if they come out with, some kind of fake nuclear deal with Iran. Why are we talking to them? Like, they canceled the meeting, then they moved the meeting on Friday, then we had the meeting and like nothing was accomplished at all. And then they said they're going to have another meeting soon. I mean, it just like, why are we meeting? Like, what, we got to take care of business. I mean, it's enough already, right? They're not playing fairly. They're hurting their own citizens. And I think it's time, but we're dealing with Taco Bell. So we gotta, get him not to keep tacoing. I think about a week ago he came out and told the Ayatollah to watch out. I don't know what he's watching out for. So, as far as those trades, I do like energy. I don't know if you like any other sectors.
Well, look, I always get excited when you start talking about an energy trade because in one ticker trader, I mean, four of our last five USO trades, so USO tracks oil prices, for the last five have been closed out for a gain. The last one we did, we were in that calls for 8 days, and we closed those at about a 78%. I think it might have been a blended gain of 78%. So yeah, I mean,
Oh, nice.
that's I mean, look, in one ticker trader, I mean that's where the trade's been at for us, has been on the commodity side. I mean, if you go back to late last year, I mean, we've had one trade recently that we closed out for a gain in IBIT, but then the rest of them since October have been either USO or UNG, which, again, that's where for UNG for natural gas, but that's where the volatility's been at. And yeah, I mean, it sounds like I think one theme you picked up on, especially late last year, that maybe you still see in play is that the geopolitical risks are very much being underpriced, underappreciated. That, especially when you had oil trading down into $55 to $60 per barrel. Yeah, sure. There's a lot of pressure to from the Trump administration to increase production and pressure on OPEC to increase production, but you forget about how sensitive oil prices can be to, say, striking Venezuela or striking Iran. Like, it's just those are not being fully priced. And do you still see that?
Yeah, I do. Again, I think you could have some downside if it subsides, the tensions, which aren't that tense. You can have a little bit of a pullback, but I mean the floor in oil this year has got to be above 60. Um, and I think I don't want to freak people out, but I think you could have an 80-90 handle. And I think after you've seen what's gone on with silver and gold, okay, which are now, destroyed people that they don't know they're destroyed. The chicken without the head. They're paying 115, it trades in half, and they're still fine. And now it goes up to 80, and they think they're safe, and they're down, 30+% in a week or two. They think they're safe. I think oil has not been attacked like that. I don't know why. I think everyone's worried about the Trump put because he wants prices lower. But I think there could be an outsized trade there up into the 80 plus handle range. But you're going to have to see some much more, aggressive type movements there. And, you know, literally, like, my focus most of the time is equities, broad base indices. And just watching the markets, like it's funny as an old time guy, like when the markets start to get volatile, I like go, oh my God, maybe we have the market back, to what it could be or what it was. And then literally 2 days later, you're back asleep and we don't even trade a million. I mean, yesterday we barely traded a million e-minis and we were up like massively on no volume. But I don't know, can you pull the volume from last week on e-min? Like, I think we were averaging like over 2 million a day. And like yesterday we did like a million. So I could be wrong on that, but I believe that that is the case. And
Sounds
that's where we're at.
Yeah, well, hey, just one question that came in, and probably along the lines of what you're talking about, you're going to be able to answer this. But the question is, I noticed that S&P Trader has recently only been releasing trades in one direction, meaning we put on a bull put or a bear call spread, and then we don't do anything on the other side. And they say, why don't you hedge those anymore with the other direction? Because yeah, there was a point in time, especially last couple of years, where we would go, we would put the trade on.
Oh yeah. So
Yeah,
we would sell a strangle, which is selling a put spread and a call spread. A strangle is just the put and the call, but we do it in spread. And that's a great strategy. And Eric's been talking a lot. Somehow I turned him into the iron condor man. And he does a lot of that. That's doing what we're talking about here, selling put and call spread. What I'm feeling this year for everybody that's watching, and I don't know how many trades have we opened, like eight,
yeah, not
seven. I mean,
so,
we've
yeah.
not had a losing trade. I don't want to jinx it. So we're doing well, but I think you're right. I mean, listen, like if we gave a call spread today and the market went up, we have the ability to do a put spread. But generally, up until like now, volatility has been higher, I think, higher on the board than what is showing. And when that happens, I want to be extra cautious. So I think they're underpricing risk. So, I want to just sort of get the one direction right, which we've been able to do. We haven't given, listen, people that have been with me for years know I probably give a trade a day, every single day. But coming off last year was the most we ended up, which I'm happy about, but people, were pulling their hair out, you know, especially mid-year because we were sustaining max losses on trades more than we ever had, and we had to like slow it down. So now I'm still in that slow, phase because I'm not so certain. The bottom line is, I'm looking at the market today, down 50, down whatever. There's not a lot of juice. And, I'm leery of the market in the sense that, we made that low Thursday night. We never traded there. Do you have a idea where S&P opened on Friday morning? Like I think it opened up for sure. So we retraced like 100 handles overnight. Okay. Um, Bitcoin traded down to 60. It was like 70 when we opened it. Like the moves were extreme. We haven't done any back and fill. We haven't even done any of that. So, and now everybody once again is bowled out of their mind, right? I mean, from what I'm seeing, everyone's like, I want to buy this, I want to buy that. I mean, it's like, and and a week ago, if we had this podcast last Tuesday, people were freaking out. My phone was exploding with people. One guy was mad at me because he was busy, never called me, never hedged his Nvidia position. It went down 15%. And he's like, what do I do? I'm like, well, I think you kind of missed it. But he was mad. Like, I had nothing to do with it. He was like, well, I guess, I took the hit. But don't worry, he's back. It's back to where it was. So I'm just surprised there's no back and fill. I wanted to discuss um, Kevin Hassett for a second. No one's paying attention to what he said yesterday, which I thought was very interesting. Okay, when is the jobs release? I mean, these numbers they're like sitting on Trump's desk for like a month, and then he's like, "Okay, just put out the jobs number today."
I thought that was interesting too. So you're talking about all the warnings he's given around jobs numbers.
Yeah, like how is no one even think? I mean, if he's giving that warning, that number has to be weak. It's not going to be as weak as expected, but as he's expecting, because they'll probably fudge it up. But I mean, isn't that something a little worrisome, that the thing that is the driver, jobs growth, is just slowing down to nothing, and the GDP numbers that they're saying that are coming out are not real, and they're really like 2% lower than what they're printing. And maybe, I think we have CPI potentially. Is it this week? I think we
It's on
might.
Friday. It's supposed to
Yeah,
be Friday.
right. So that's going to be, last was 2.6, it'll be 2.2. I mean, it's like I'm not understanding how there's no inflation, but there's inflation in everything, and how they're printing these numbers and nobody really cares. And bonds are stuck. China says they're not buying any of our bonds. But somehow, Nvidia, in the last 6 months or 7 months since I was away in July of last year, they've sold H20 and H200 chips to China relentlessly, even though they haven't sold anything. I mean, literally every time there's a headline about it, nothing ever happens. So, here we sit, markets are, bid again. We'll see if they stay bid. Bitcoin came off a little, is below 70,000. The line in the sand there is 65,000, because it really never traded below that. So really, I mean, it traded to 62. But I would look at that as a level, and like currencies again, dollar weakness all over the board, right? And trades are intact for what was, except this is year four. Equities are up again for the year, and
I
it's
think I think near term for everyone that was freaking out over the the soft, especially in the software sector. So the software trade has just been getting absolutely crushed. Specifically within the tech sector. But I don't have the chart, but one of the best charts I saw this week was somebody overlaid a software sector ETF with Bitcoin, and the correlation looked like it was one. I mean, those things have been moving together so well. So I think if you're wondering if software, especially names like Palantir and AppLovin and some of these other names, if they're going to find some traction here, I would keep a close eye on Bitcoin. I think it's a big warning if Bitcoin can't see better, call it escape velocity off that test of the 60,000 level. We're basically still just trading a couple inside days relative to the big decline that it had either Wednesday or Thursday last week. And
yeah.
if we
Well,
don't
I
even,
I said 65,
yeah,
66 if it gets there, but no one. Listen, the one thing I'll say, and I started the podcast with this: anyone that owns Bitcoin right now is not selling. They're not selling. They'll never sell. It can go to 30,000, they won't sell. It'll be a relic in their book. It'll just be a relic in their portfolio. I'm just telling you. It's no price on the upside and no price on the downside. And then what they do, the investor base are like babies. They just cry. They're like, not really cry, but they complain. "Ah, what do I do? I got a hedge. You're an option expert. How do I do this? I can't take it anymore." And then it goes up and everybody's fine. So, but you did point out something interesting, but I'll get more granular. Okay. I think gold and silver are moving with the S&P tick for tick. Okay. Tick for tick. Okay. If if silver is up, the S&P is up. If silver is down, the S&P is down. If the S&P is down 40, silver's down 8% or 6%. Gold less. Gold moves like a third the delta of silver, maybe a little less. So I think that is something to watch also, is the movement of those commodities. And it's interesting because based on, Bitcoin came off the low a little, but based on where Bitcoin is today and silver, you would think the S&P would be down 20 to 30 to 40, and it's not down a lot. So I don't know whether one is going to come back or the other is going to meet the other, but at some point all of these trades are linked. I mean, come on, Thursday night silver traded 64. 64. I mean, it's unbelievable. And that S&P was only down like 80 handles. Like, it just seems like they can put risk on through air, and they can take it off through air. So,
Oh, you
again,
said you think gold and silver are trading in lockstep with the S&P. How much do you think some of the recent movements in the dollar are impacting gold and silver? Just because gold and silver, that when they had that huge crash is when we had a failed breakdown in the dollar index, and then they had a decent rebound yesterday and the dollar was selling off. Do you think that correlation's still holding up? Weak
I
dollar,
mean,
strong
I
pesos.
do, but I don't think people are trading off it. I do, and we watch it, but I don't think people are trading off it. I just think that, it's, total risk on, total risk off. And what I would say to you, and I don't know what your thoughts are or feelings, but like gold and silver now for like 3 or 4 years on Opportunistic Trader, and especially through Eric, okay, um, were, watching, we watched metals every day, every single day. It was a slow grind up. A big move in metals, big, was under 2%. That was big. Now these things are moving 5, 10, 20, and that's because owned it's owned by a different element. I think like the guys like Druckenmiller, and I think like Ray Dalio, who's been pumping it. I mean, these guys are professionals. They're not staying in, this thing when it's up, silver's tripled in price. They're taking their profits and running. And I think, it's funny. It reminds me when Bitcoin made the high and Eric was on and he was talking about the OG was selling to a bunch of retail, and the retail is bigger than the OG and whatever. But retail is never bigger than the OG, the guy that really killed it. And I think the people that really killed it in metals are stepping minimally to the sideline and maybe even shorting it. Okay. And then, we have a hawk coming into the Fed, right? So that is a trader. He works at Duquesne, which is insane that, he works for Druckenmiller, biggest macro guy in the world. Okay. And he's buddies with Besson. So the bottom line is, he you know, his mantra is to control this speculation. And listen, I don't think it popped silver that day, but it certainly helped. And I don't think they're going to get away with the shenanigans that are going on under Powell. I mean, Powell is asleep. Like, literally, for him not to comment on gold and silver after that kind of move or anything is just crazy, no?
He did comment on it. They asked him in his the Fed's last press conference, and he basically shrugged it off. He was like, "We don't look at those things." And you're like, "Serious?" Like,
Right. That's what I'm saying.
yeah.
So, I mean, that's a big problem. Okay. Warsh is coming in. I mean, that's what they're looking for. And they're actually looking to run the Fed in an efficient way to get debt off the balance sheet, lower rates, which, listen, the problem with the lower rate theme that he has is rates are already what, three and a half, three quarters.
Yeah.
Okay, where's he lowering them to? Two? I mean, okay, so he lowers them to two. What's that going to do? I mean, it's not really going to do anything. So he doesn't have a lot of rate room. Maybe he does other things. But I think we're going to come into a much more vigilant Fed that's not asleep. I mean, literally, this guy's like sleeping baby. He's like literally sleeping baby. I mean, he's not here.
He,
I mean, I know he's done or whatever, and he's fighting with Trump, and he wants to stay under the radar, but he doesn't. He doesn't do anything. Am I wrong? I mean, he stayed too easy, then he stayed too tight. He's so behind the curve, and we're getting a traitor in the Fed, okay, which I think is going to be very interesting. Listen, he's not making the trades. Druckenmiller's making the trades, but he's telling them what the Fed is doing
what to do.
internally. So, but I do think you have a situation where the Fed is going to become more vigilant, okay, and basically curb the shenanigans that's going on in meme land and all this other stuff because they know, listen, they know this can't end well, right? I mean, it just can't. So, but
What do you
again,
what do you think about currency volatility right here? I mean, that's that like with all these developments around the Fed. I mean, they have to be linked, but all of a sudden, I mean, you're seeing currency volatility that was pretty much non-existent during the second half of last year has come back in a pretty big way.
yeah, but I mean, I think like, listen, my focus is the dollar against, so it's dollar euro, dollar yen, dollar British for the most part. We may do some other stuff, but not really. But like dollar euro's top end of the channel, like our last trade took place in like the 120, almost the 120 handle, right? And then we clipped that off when he was announced into office at like 118. So yeah, we have volatility, but not, listen, I've been trading this market for 40 years. Okay. And I traded back, basically when, Soros basically broke the Bank of England and then the yen. This is a crazy story. So everyone's freaking out at the yen at 150, 160, whatever. Okay. I remember a night the yen was 350. Okay, you got to go back. Okay. I'll bet you it was over 300. And my son was born in 95. If you could pull a chart, it was 95. This thing was moving 100 figures in a day. I mean, 70 figures. I mean, these guys, these cowboys were bigger than the central banks. Well, it's kind of like what we just talked about with Warsh, how he's going to change the Fed. It was, listen, back in those days, the central banks were not smart enough to understand what what these guys are doing. But if you recall, there was a company called Everest Capital, Marco Demetria. Uh, he blew up when they took the peg off the Swiss franc. Okay. You know who ran the central bank of Switzerland? An ex Goldman trader. Okay. They knew they had the market sided. They basically took the peg off and destroyed people. Okay. Because there was so much speculation. So, what I think is going to be very interesting moving forward is that Warsh is a very, very smart guy and understands markets where Pal doesn't understand anything. So, I think you're going to see a lot of stuff. And I actually don't think they want a weak dollar, even though Trump probably does. Because Trump's looking at it like, hey, if our dollar is at zero, we could sell a lot of stuff, but he doesn't realize the repercussion for that. But, you know, that's my thought on the dollar. So I think we covered oil, we covered, I don't really see much in gold. global move with the S&P. There's an insatiable appetite right now to buy S&Ps. That may change at 10 o'clock. I have no idea, but they just won't. They want to own them. I did see yesterday, you know, in my, looking at the markets and seeing volume, I saw a lot of volume relative to the day come across in Nasdaq on the sell side, up, near the highs yesterday. Good volume, kind of the same volume I saw on the lows when it looked really bad. There was someone coming in with like 250 Nasdaq futures, which is a good size. So, keep an eye on a little bit lower levels to see if we hold. Probably coming with a trade today. Got to look at the premiums for LSP, or the spread trader. Gonna have you look at some structure for oil. Looking at what might look good there, but I do think, like if you look at Poly Market, there's a 30% chance, which I think is pretty big chance, that we're going to strike by the end of the month in Iran. I mean, I don't know who's coming up with this stuff, but that's what I'm seeing. And it's funny. The market was up, then it was down on the lows, and now they're bringing it back like they do. We'll have to keep an eye on Palantir, Nvidia. An interesting one is Robinhood. Like, that's the retail meme, company that has like almost $100 billion valuation. That's just executing trades for retail. That bounced a bit. Maybe they have earnings tonight. I'm sure the earnings will be good, but I don't know what they can say. Their account values have to be down dramatically. I would think, they're leverage Bitcoin, and Bitcoin is down. So
Just quick question on Bitcoin. I had a question come across in the chat. So we had the Bitcoin chart up earlier. It shows Bitcoin chart over the past year shows a large rounded top. Is there a possibility it might work its way down to the $30,000 to $40,000 range over the next couple of months?
no, I
Yeah.
don't see that. I don't see that. But I do see a well, listen, it's all based on equities. So like if the equities get weak today, then Bitcoin will trade through the low of this move, like 68,000. If equities stay kind of stagnant, then nothing is going to happen. It'll stay around here. But, to me, I don't know why everyone thinks that like that's a low, that you buy it and it's going to go back to 100,000. I mean, I just, hey, anything's possible, and it's always happened before, but I just don't see it. So, but like today, as I came into work, Bitcoin was cracking down, and S&Ps were actually up. Then the S&P went down, and then Bitcoin came back about 1%, which isn't a lot, 600 points or whatever. And then the markets all stabilized. So, I would look for that to trade lower if they, hit equities. They've been buying the same stocks every day for the last 3 days. We'll see if that continues. And, I think if we get lower prices, you may be able to press, and maybe the S&P comes into the channel in between, 67 and a half and 7,000, which is literally almost 5%. So, look for that. And other than that, I don't really, I've talked a lot, I've given a lot of ideas, but my biggest thought is, and I want to do this is, put on a long oil position, because I do think it's going to heat up, and I'm just surprised. I'm surprised how yesterday Hassett says the numbers are going to be really weak. Okay, why is he saying that? Like, he has the number in hand. I mean, listen, the numbers don't mean anything, because the jobs number, as you know, is always the first Friday of the month, right? I don't know when it's coming out. When is it coming out? Do you have it?
It's I think either tomorrow or Thursday.
Yeah, so
It's
whatever.
scheduled for,
I
but
mean,
yeah,
but no
yeah.
one
I
cares.
think it's I think it's funny they're trying to he's out trying to warn people on not overreacting to one bad jobs number. That's
Right,
when we're
right,
supposed to get out this week.
right, because it's probably a negative number for the first time ever, and I think they're going to revise down GDP and all of that. So, I think keep an eye on S&P. They're in buy mode. Or Nasdaq, either one. If that thing subsides, maybe we get a reversal, and then maybe they take some of this risk on trade risk off. I mean, look at the moves. 64 in silver to 84. Okay. That's 30 plus. Gold traded 4,400, traded 5,100, 700 points. So that's almost 20%. I mean, these moves are, I mean, you don't, I mean, you would have to believe they're epic, right? If you can make 30% in 2 days. But I mean, this trade is not for the faint of heart, right? I
Yeah,
mean, so that's what I see. We're getting close to the opening. I want to throw it to you to wrap us up, and I appreciate you joining me as always. And you're awesome, and your
appreciate it.
insights are very valuable, and I greatly appreciate it.
Yeah, that's love being on. So thanks for having me. And yeah, I would say one thing that we started with that I would keep an eye on is just how the narrative has shifted around some of these AI names. Specifically how these increases in capex spending have been punished recently, and this I want to remind everyone watching really quick that you actually have an event. You have a webinar tomorrow at 8 p.m. There should be a link in the description if you want to go sign up. But the thing that we're talking about, how to take, some of the things you're hearing on some of these calls with, executives at Amazon, executives at Alphabet, and so on, how you can take that information and actually turn it into a trading plan. And this week's been a great example because of all the volatility that we've seen around those AI names as some of that news has come out. So definitely check out that link if you want to join. That's tomorrow at 8 p.m. And besides that, I think I would, as it pertains to all these software names, also keep a close eye on Bitcoin right here because those two have been very strongly positively correlated.
All right. Well, I appreciate it. Good luck, everyone, and we'll be back tomorrow. Peace.